Hello, everyone. I am Lisa J. Stocks here with my co-host for episode 7, Prez-the-Investor. Hello there,
Hello,
Prez.
everyone.
Um, so Prez, do you want to officially announce the topic of the day? Because I kind of just give a little, I don't really go deep in the description with our topics. So I'm trying to keep our topics as a surprise. So,
Okay, today's topic is risky assets, how we approach them, and the highs and the lows. What's hot now versus what was hot then.
okay. All right. So, where are we starting with this? Is there any flashbacks, any old things that you want to get started talking about of uh, things that you invested into that not necessarily a mistake, but in retrospect, we or you, I definitely have mine to share, could have done something different. So, what are your thoughts?
My thoughts. Let's see. I'm gonna name one. I'm gonna talk about Volta. Volta was a electric vehicle charging station that was located at your local giant food stores. And I would pull up to the Giant because I'm a Giant fan, of course. I would pull up the Giant to go do my shopping, and I would always see the charging station, and it has a big, large LED screen on it with videos and advertisements and things like that. So I like the business idea. Okay, you can charge your car up and get advertisement while you're at this place of shopping. You understand what I'm saying? So I
Okay.
start buying shares of the company, and the share price it went up for a little while, and then next thing you know, it started tanking and tanking and tanking and tanking, and I'm buying more and buying more. Call myself buying the dip, a term that you'll hear a lot in this space, buy the dip. And I just kept buying the dip, but it wasn't the right dip. And eventually, the company was bought out by Shell. So I had just happened to cut my losses right before this news happened. But a lot of shareholders ended up getting paid out at 80 something cents per share. And they've been buying this company when it was two, three, $4, $5 per share. So they pretty much lost out on a lot of money. That's one of my bad experiences in investing.
All right. I think when you mentioned that, I wrote down charge point because I think your Volta is my charge point. I thought, I really, at this time, this is many years ago. It's probably a little over 4 years ago. Uh, I can't say that I did my research, my legwork on trying to make, this decision. Charge point, charging station, electric vehicles. I think I could dabble in this a bit. So, I have my charge point and it's looking very sad in my portfolio. I have not cut my losses and it's just kind of one of those things that uh when I say a mistake, I did put thought into other investments much more than this one.
Hmm.
But when I see the progression that I've made, say, for example, in, Amazon, as opposed to something like ChargePoint or Target, where I just came back, it was red for a long time, uh, I think to myself, I could have it would have been an easier process to just put the money into Amazon, put the money into VTI instead of
Hmm.
dabbling into some of these other individual stocks that have not performed the same way as easily for me?
Now,
So,
as far as charge point, I am guilty of charge point as well. I was
okay.
in charge point as well, but I did eventually end up cutting my losses, and I rolled that money into more sounder investments. Like I did an evaluation of my entire portfolio, and I cut a lot. I cut basically all of the losses of anything that wasn't profitable, and I took that money, that same money, and I put it into things like BTI and Apple and Microsoft to build up those positions because I was way over leveraged and higher risk in smaller cap companies versus my Apple and my Microsoft, the things I should have been heavily weighted in.
Yeah, I can't say that my portfolio ever got like that because um, I was over 50% Apple. So my
Mhm.
portfolio overall was not disappointing because of that, but I made the choice that I want to have more ETFs and get it more balanced than that. But yeah, we've uh we've learned from those things, and I guess we're also going to get into how we can plan better going forward and how we think that you can on when you're, especially if you're going to invest into individual stocks,
Mhm.
how to just plan for the long haul with it. Is it truly an investment for the next 10, 15, 20 years, or is it a trade? Do you want to have a plan? Do you want to continuously research it? And, is there going to be a time potentially where you might want to let it go?
Mhm.
Yeah.
Oh, I would like to add something to that, or as far as my reasoning on why I was so over leveraged, and I want to stress the importance of buying fractional shares. When I first entered into the market, I would look at the things that I should have been buying, like your VTI and your Apple and your Microsoft. Oh, this is $300. Oh, this is $400. I can't afford to buy this. So I was more reluctant to buying a fractional share because I didn't want to seem like I'm coming to the market poor. You understand what I'm saying? Like, oh, I'm just going to let me get one rib. You understand what I'm saying? I'm using that as an example. Like, I didn't want to be like that. So I started buying things that I can afford whole shares of, like your charge point and your lucid and things of that nature. But I just
Mhm.
wanted to add that in. Don't be afraid to buy fractional shares. They do accumulate over time, and you'll have whole shares before you know it.
Okay. Okay. We have a comment here. Investing is really intimidating for those who don't know much about it. Um, I agree with what you said 100%. And it was pretty early on. I was doing the same. And I have in my notes here about penny stocks and low price stocks. You don't have to just chase, things like that. I wanted to have exposure to, for example, Tesla and Amazon. Amazon was over $3,000 before the stock split, when I first started investing into it.
Mm-hmm.
Tesla was over about
About
$1,200.
1,200. Yep.
Yeah. And of course, Bitcoin, tens of thousands of dollars.
Let's not
So
forget about Alphabet.
Google, I don't know. I don't know if I was investing into Google before, when it was a price that was really unattainable. I would have to look back. I don't know off the top of my head. But yeah, I had to, because of all of that, I said, okay, I have to get open to this $10 at a time, 5,
Mm-hmm.
$25, whatever I have, because this is the only way. It's available to me now. In this day and age, it's available to me. So I don't need to just chase penny stocks, low price stocks. I can have the things in my portfolio that, the more people that have a different budget than what I have are able to
Mm-hmm.
have. I can invest in pretty much almost anything that I want. So
Mm-hmm.
yeah. And I don't know if everyone's clear as to what fractional shares are. That means there are many brokerages that give you the option of investing as small as $5 until you can build up your position into a share. So even though a stock price may be $400, $100, whatever it is, you can just invest whatever amount you have and build into it in that way. So you don't have to wait. Prez, what are you grinning about over there?
I have a funny example of how I explain fractional shares. It's like going to the deli and saying, "Let me get $5 worth of ham."
Mhm.
That's a
So
fractional share.
that may
Let me
not
get
be
$5 worth of apple.
in today's day and age, that is not a full pound. With these grocery trips, I know what you're saying. Okay. Um, so yeah, I definitely do that. So I guess Socks in the Garden said she was not aware of that. So yeah, you don't have to buy a full share.
No, you don't.
Um, and I mean, there are most of the places that we invest in allow for this, so you don't have to have a large amount. There are no minimums and fees and all of these things, all the obstacles that you may think are out there. You can just get started investing with whatever amount you have.
Mm-hmm.
Yes, and they like your analogy there. But So, uh, let's see. So I was talking to you on Friday through your live stream. So Prez
Hmm.
has been going. If you're not already, if you're watching on my end, don't forget to subscribe to Prez-the-Investor. Prez started a new channel recently, and we're still on the road to 100 subscribers for you over there. So let's please subscribe to his channel also. He's been going live in the mornings, I think Monday, Wednesday, and Friday. Maybe you will see
Yeah.
a live from Prez potentially on those days. So check those out. Um, I was saying to you on Friday that uh, I had an order in for Doge at 0.1975. I thought it was going to
Hmm.
fill yesterday and it didn't. It came down to like 1990 something, 1980 something, but it still didn't fill.
Wow.
Um, yes, I will drop his link again, Peachy. Um, so
And you own that fraction, right? Yes, you do own that fraction, and you can you don't have to wait to have a whole share to sell it. The only thing you have to sell it at market price. You can't put a limit order sell in.
um, so in your the topic of today is speculative assets and how to approach them. So,
Hmm.
um, Doge is a crypto. For me, I that falls into, a trade, more of a speculative thing for me, not a long-term investment. So, Prez, can you talk a little bit about, um, you know, planning on your how you go about planning, picking something, what price you want to get in, what price you potentially want to get out. I love stressing to people about a stop loss because I don't if you do decide to trade, which is not a necessity. I think we should all be investing but not necessarily trading. I want
Right.
to get into those type of things again in this conversation, and just get an idea from you on how you go about when you're going to get in, having the full plan of what price I'm going to buy, what price I potentially will sell, where I'm going to have a stop loss. Um, because I think now that we've kind of had a few years of investing, dabbling in trading options, regular stock trades, you now have some examples to look back on, and I think that's
Mhm.
what you kinda wanted to bring in this conversation. Let me know if I'm going in the wrong direction here.
No, you're going in the right direction. So
Okay.
basically, how me now versus me then, how I approach riskier assets, because we all like fast money. I mean, I'm not going to sit here in front of you and say I don't. Um, Me now, I look for what's hot. I look for what's trending, and that's when I have to use my actual technical analysis skills. That's where that comes into play. And I will recommend that you take the time to actually learn how to read a chart. That way, you'll have a better understanding on entry prices and how far could this go versus you listening to the hype. That's the last thing that I would want for you to do because I'm guilty of listening to the hype. I'm listening to this video. I'm getting that notification on YouTube per se. Oh, this coin is going to 1 penny and it has 4 zeros in front of it. You understand what I'm saying? It's not even a fraction of a penny. And without doing the proper research, you can find yourself losing a lot of money or looking at unrealized gains and you're questioning yourself, should I cut my losses or should I hold on to this? And to the point where you may even start believing into the hype that's being pushed out, that's being presented in front of you, to where as though you start believing in this speculative asset, and that's not the good way to go.
So what do you mean about believing in the speculative asset? Do you mean like as I'm not here to have any I'm here to make money. I'm not here to have any emotional attachment. So I think that goes back to a previous show that you had us do was on the psychology. So do you think that you've kind of cut that out of your thought process of, I believe in, or I believe in something to a degree that I'll take it. I'll diamond hands it. I don't care which way it's going.
Now, I have had that mentality in the past, and what basically I'm going to try to explain what mentality I'm speaking of. A lot of these speculative risky assets have what cult like followings, where the investors are like, it's like a gang. You know, you got the Sheeb army, and you got the Doge army, and you got the AMC apes, and you got the GME apes, and they don't even like each other. And you understand what I'm saying? It's like you don't want to get caught up in this, and you're looking at a red portfolio, and you're beefing with each other when the
Mhm.
whole time it's you that made this decision. And then you're looking at the content creator that you've made the leader of the what that said army, and you're bashing him and cyberbullying him, and that's not the way to go. Don't fall victim, guys.
Okay. Yeah. Tay is sharing that she blew up an account. Yeah. I can't say I well, it depends on when I'm able to cut my losses on certain things that I'm holding that
Mhm.
I guess that'll be the day that I'll say, I kind of really have to take the full loss, but I guess I'm not quite there yet. Um, so would you say that in the past you've blown up an account?
Yeah,
Yeah, yeah,
yeah.
yeah. But if
Trading, not an investing account. I've never actually blown an investment account, and my investment account was over leveraged at one point, and I did eventually like sold everything and started fresh, and I built it to where as though how my pyramid strategy is set up. Now that's the way it's going to stay. And but yeah, trading accounts. Yeah, I've blown trading accounts, not knowing actually how to trade, but I call that paying tuition. Got to lose to learn, unless you're gonna really obey the rules that's being presented in front of you.
Yeah, but if you're here and you're watching us and you follow our channels, listen, we already like you talk about pay the tuition. You don't have to. You don't
No,
have
you don't.
to. Listen to what we're talking about and you can skip that step and just hopefully be more profitable and build a more sound, reliable portfolio and not have to go through all of the bad, the bad parts of it, the losing the money, the trying to build yourself back up because I think especially when you have a bad experience with anything in life, you might get to the point where you're kind of standoffish and you pull back and when it comes to investing and building your portfolio, all that is doing is making you lose money in the long run, you
Hmm.
know? So just don't feel like if you're getting into investing that there has to be the negative. You can get into it in a safe, I think you can get into it in a safe way and not go through some of the stages that Prez and I talk about sometimes. Um,
Yes, a trading account is different from an investing account. Trading is short term. Trading is like dating. Investing is like a marriage. I mean, I can't put it no simpler than that. That's how I simplify it to my own self, and that's an easy way to look at it.
Mhm, mhm. So I was watching a video earlier today. I'm not going to say whose video it was, but it was titled the top 5 investments to get into right now.
Hmm.
And the title and the thumbnails talking about investments to get into. When I start watching the video, it's about trading. She's talking about $1, $2 moves in the stock price. And she's flat out saying, I'm not going to be holding this 5 years from now. I'm looking at the 1 year trajectory of the stock price. And all of this sounds like trading to you, right? Right, Press?
Yeah, it does.
Yeah,
It
okay, so
does.
she's talking about the Chipotle stock split, and when the split usually occurs, how the stock price usually comes down, and then, shortly after, it goes back up, all these type of things. So, and everything that she mentioned they were all individual stocks, obviously, that she was talking about, but I just did not like the way that this, that the title and the description was, and it was a very short video. It was only 10
Mhm.
minutes. I think out of a longer, probably hour plus discussion, they just showed this 10 minutes in this video. And for someone that's not experienced, they're not going to know the 5 stocks that she reviewed or she touched on in this little, short clip. They're not going to know what price to get in at, um, using a stop loss, realizing how many months or, weeks even, or she's really literally said she's trying to make money on a daily, weekly, and monthly basis.
No
All
plan.
of Hmm? No
No
plan,
plan.
yes, yes. It did the video, the short 10-minute video that I watched did not provide a plan. And I don't want anyone that's watching my channel to, uh I'm not here presenting plans, but I want you to know just because I mentioned something, a lot of the things that I've been investing into, it's been for uh, 3 plus years or 2 plus years at least, some longer, closer to 5. But, with that, especially, when we went into the whole lockdown situation, everything was down, So
Mhm.
I was dollar cost averaging, building up into certain positions, but you have to do like Prez was saying, you may have to take if you want to be, especially if you want to dabble in trading somewhat with investing, but you have to have a plan. You have to know what you want to accomplish. And I think a lot of people just hear something and they jump in and they don't have any price point of, they're not making the full plan of I want to get it at $163. I want to get it between 160 and 163. If it goes lower, maybe I'll wait. If it goes higher, I'll wait. So, so
Mhm.
I just want everybody to I just want to chat about these type of things so that people can make a plan for themselves that is uh something that they can build on long term. So, Prez, don't let me keep rambling on.
Now, I would like to add to the as far as the content creator is concerned. Now, you guys will see a ton of content creators that have clickbaity titles, and they're promoting high risk assets because the finance niche is one of the highest paid on YouTube. So, of course, a lot of people will gravitate to that. Now, you don't even have to really know what you're talking about, and it's very easy to get caught up in these type of videos, this type of content, because a lot of us have the casino mentality to begin with. So of course we're going to want that quick fix as far as fast gains, and you really got to do your research.
Yes, yes. So, um back to speculative assets. So, can we talk about some more speculative things that you are right now considering investing into or for a trade? Is there anything that you want to share in that area
I just
and how
been
you're managing them?
as far as right now, as far as speculative assets, it's going to be a very small amount of capital. It's going to be like a trading portfolio. I mean, a trading account is going to be only like 5 to 10% of the entire trading account. Now, a trading account is just simply just cash inside of a brokerage account that you use to trade with. You get in and you get out and you run some repeat. You don't want to really get married to any of these hype plays or risky assets as far as your meme coins and your meme stocks are concerned. Your things like your AMC and your GameStop and your Dogecoin and Shiba Inu, things of that nature. Um, and how I approach it, like I said before, I look at the technicals, chart patterns of these assets and how they move, and I go along with the hype that's being promoted about these said assets. Like I try to get in before the crowd and get out before the crowd.
Mhm. So, are you doing a lot of that with, well, not even a lot. Are you doing any of that with any of the crypto meme kind of stocks right now?
My main go-to has been Shiba Inu. That's been my main go-to right as of right now. Um, It's been one of the fastest movers for me. Other than Dogecoin, I keep missing my ride on Dogecoin, but that's neither here nor there. But Shiba Inu has been my number one go-to for me as far as how I've been getting my quick fix. But I jump in and I jump out and I rinse and repeat. I don't always win. Sometimes I'll get stopped out a little early, but that's just me as far as how tight I set my stop loss. I'm not willing to lose 10, 30, 20, 30% on this trade. I like
Mhm.
the. It's not about how much money you make. It's about how much you actually keep. I want to keep all of it if I can, but I know I can't. So I'm gonna try to keep as much as I can.
Yeah, and have more wins than losses in
Right.
the long run. So I see, I think there's a birthday girl in the chat. I see, some happy birthdays to Anti going on
Happy
over here.
birthday.
Yes, yes,
Happy
and,
birthday to you.
okay. I see Realist in the chat. Let's take a second and acknowledge everybody. Realist, I did check out your premiere earlier today too. Yes, it was good. Hi Wanda, Miss V, Gary, Chocolate Drop is here.
They said
Um,
10% I'm out. Yep. 10% I'm out.
yeah. And and that all depends on sometimes I can't even think about it as a percent. I have to think about it as a dollar amount because
Yeah, yeah.
depending on how much I'm putting in, yeah.
Yeah, because sometimes I'll see a 10%. That's a little. I'll calculate it. The 10%. Oh, that I don't want to lose that much.
Peachy stopped by over on your side,
Thank you
Prez.
very much. Thank you.
Um, but yeah, thanks to everybody for tuning in. Um, I wasn't sure. I was like, Prez, should we skip this week? And Prez was like, no.
No.
But I hope everybody has a nice dinner after the
Do,
live stream.
do crypto ever stop being traded?
No.
Well, we can make money 24 hours a day, 7 days a week then.
Okay. Um, all right. So what's next up? So well, I have some different things written here, but I know your topic is speculative assets. What do you want to talk about next on that topic? Because I think I have some things on here that are going a different direction.
Um, where do we find out about these speculative said assets? Some of the many avenues of social media that we find out about, where we get the news on these speculative assets. Like YouTube, of course, is one place. And you have the Reddit community. Then you have Twitter. That's like the breeding ground for all things finance. It's like that's like the hub. Like you can follow certain people on Twitter and you can get all the info you need.
All
Uncle
right.
Larry, how you doing, Uncle Larry?
Hi, Larry. Thank you.
Where
Um,
else? The trading app comment threads, like your Webull and your public. You can go on these actual stock tickers comment threads and read some of the comments. Oh my God, especially on Webull, on some of these meme stocks in the comment threads. Oh my God, some of these people sound so sad in these comment threads. They're looking for guidance. They're asking, where do you think the price is gonna go? And they're in their feelings. They're on there beefing with each other. It's just ridiculous.
okay.
Guys, don't fall victim.
And this all goes back to what we are always talking about. What I am trying to say, Stocks with Josh is here also. Hi, Josh.
Hey, Uncle Josh.
I've been seeing this week, Josh was in Chicago, so I've noticed that Josh was recording with Larry and in Larry's studio sometimes. Did you notice
They
that?
probably sitting in the studio C right now, like,
Oh, out in the car? Maybe, maybe.
Mm-hmm.
Happy Easter to you guys. Um, so yes. So I think what you're describing there for those who's not understanding or didn't get the full picture is that some people have been holding on too long, didn't have a stop loss, didn't have a plan, and now they're so severely down in their position that they
Right.
don't know what to do.
Mm-hmm. And
And
that
I
can cause you to become discouraged. It can cause you to not even want to invest at all. And you probably have a lot of people out there that's probably still had money in the brokerage account, or they done withdrew it all, and they still have brokerage accounts open, and there's nothing in there, and it's just sitting dormant. And that's just not the way to go. You're missing out on the bigger picture here. With building wealth, it's a marathon. It's not a sprint. It's not going to happen overnight. Get that casino mentality and put it to rest. Unlearn those bad lessons that you were taught.
All right. So even though I think you were saying that people are like kind of on the hunt for the fast money,
Right.
um, uh, we've kind of come away from that, and we've made a plan, each of us individually, like how we're going to follow building a portfolio, having that strong foundation, having the ETFs and knowing what assets as far as individual stocks that we add to our portfolio kind of as a set it and forget it thing that we don't have to worry and watch constantly. Um, I see KG's in the chat also. Hi, KG. Happy holidays to you guys. Um, but what can we do before I don't want people to be overwhelmed with I need to understand, I need to understand how to do the charts and the P ratio and all of these different things. Don't let all of that overwhelm you and you're letting time pass and you're not investing at all. So even though the topic is that, can we take a little time and talk about just some basics on just staying consistent and investing for the general people that are ready to do that, whether it's in your retirement account, in your through your employer, your own IRA, your own individual account, say on Webull, for example. What are some basic investments that you have in your portfolio that you don't have to worry about?
I don't worry about VTI.
You don't.
I don't worry about Apple. I don't worry about Microsoft. I don't worry about Alphabet. Well, I do sometimes, but at the end of the day, I don't. I don't worry about Alphabet. It's quite a few other like smaller companies like your I can't think of any right off the top of my head, but like
So
when I open up my cabinet and I look at the items that I use, that I consume, those companies like my McCormick and things of that nature, I look at those like I don't see those ever going anywhere.
Okay. So I think I'm similar. I have my S&P 500. I have my FXAIX in my IRA. Have VOO, VTI, Apple, Google, Amazon, those type of investments that have performed well that, I don't have to watch constantly. Now, when you want to get into, some different things that I consider more of a potential, they have to prove themselves for me for the long term. They're not necessarily immediately long-term holds, like
Mm.
Chewy or, Mara or different things like that. They're going to take more thought and more effort and more planning on my part. So I want everybody to know that there are definitely investments that there's an investment type for everyone. There
Mm-hmm.
are ETFs, there are index funds, there are just invest into the whole S&P 500. And then there are things that take more thought and responsibility and research. And um, don't let time pass you by and you're concerned about all of those other aspects because you don't have to start off there and you may never even want to take on the responsibility of maintaining that type of portfolio. So that's my thought process. I just like to stress it because I don't want people to not invest, or not, yeah, basically let investing pass them by because they don't think that they're ready. There's for me, from my point of view, there's no I'm not ready yet. If you have $5, get started with that. Be consistent and then continue to push yourself to increase it to the max. Take the time to cut things out of your budget, evaluate and see what you can do.
I
So
started with $1.
Mhm.
I started with $1, y'all.
Yeah.
I opened up the Public Investment App. That was one of the first ones that I started, and they gave me $300 worth of Tesla, and this was back before the Tesla stocks. But Tesla was $900 at the time, and they gave me $300 worth of Tesla. I still had the receipts in my phone. I'll post it on the video one day.
Okay. All right. So are there any comments coming through that you want to highlight, or any questions or comments that you want to acknowledge here or answer? Let's see. Who's talking about the Easter? Yeah. Let's see what Socks in the Garden is saying. Um, yeah. Everybody, yeah, we're all in different places, and it's great to take the time and work to have an understanding. And I love people saying or sharing that even with a small budget, that you can get started, and um just being consistent in time, you will really see that you're making progress. Now, I say that you have to definitely pair that with sound investment choices, because sometimes I see people saying that they're not progressing, but it's
Mm,
their investment choice, or it's that they have not been consistent
right.
to, you know, dollar cost average, get in at different price points, let all of the your purchases average together, and then in time you will then potentially see growth. But as I said, you have to make sure you're pairing that with sound investment choices.
Hmm.
Um, and a lot of the things that I've mentioned today, I've been able to achieve that with, especially like the basic things that are at the top of the Fortune 500, the Google, Amazon, Nvidia, those type of things. So so
Another thing
Chocolate
that I like to
Chocolate Drop
stress:
is over here mentioning your VTI. Why are you not worried about VTI? VTI.
BTI is almost 4,000 companies. Unless the human civilization is about to end as we know it, I'm not worried about BTI.
VTI is the US is a US total stock market exposure ETF. So the overall performance, I guess, is similar to VOO, about 10% per year.
Hmm.
And I definitely have shared that there are some years where last year, the S&P 500 at least, I don't know the specifics on VTI specifically. I more have my numbers in my head on the S&P 500 was about 27% return. And then over the first, say, 6, 7 weeks of 2024, it was already up another, it was 8% in coming into the new year. I didn't plan on pulling anything up today or sharing any screens, but it's just an easy, sound investment choice,
Hmm.
that gives you exposure to, like Prez said, nearly 4,000 stocks. So, in there, you're gonna have all of the things that we've mentioned. You're gonna have the exposure to, say, everything, realty income, Amazon, Apple, Google, Nvidia, Walmart, everything that you can probably a lot of the things that you can think of are gonna be in VTI, definitely. And 500 in the S&P 500 investment, so significant amount there also. Um, so
I say BTI till I die.
yeah, okay. So listen, if we ever have a trivia day over here, listen, guys, everybody. Prez favorite ETF is VTI. Lisa's daily $10 a day investment, VTI. Um, so how's
Pretty much
everybody
can't
doing?
go wrong there. You pretty much can't go wrong there. And
Has
it doesn't really move. It's not very volatile. It doesn't move up and down fast. Like the rest of the market can be tanking. And I look at VTI in my portfolio and it's green on the day. I'm like, what's going on? You just holding strong, huh?
Yeah. So, tomorrow is a new month. We're almost
Mhm.
to tax time. Has everybody done their taxes? Are you all set with that, Press?
Yeah.
Yeah,
I
I'm
hate
not
the
quite I'm
IRS.
not quite done yet. I'm almost there.
I
So,
don't like the IRS.
yeah. Oh, yeah. Um, me neither, but What do they say? Death and
Mm-hmm.
taxes, right?
Mm-hmm.
Nothing we can do about that. So, what other things did you have that you wanted to talk about? So in so-called, things that haven't proven themselves, as you put it, speculative. Are there any things that you've taken a look at as far as like PE ratio and potential growth that is currently, maybe not on many people's radars or anything that you had your eye on?
I've had my eye on Palantir for the longest. I have a very, very small position now, and I haven't decided how long I want to stay invested into Palantir. But I like the business model. I like the technology that they're talking about. And I've been doing a little research on Palantir here and there, for quite a while now. But that's one of them, and DraftKings, because people like to gamble. Those are like the main two on my radar right now, my immediate radar. Like I want to hold on to these for a little bit of time instead of look at them less and less of as a trade and more of it as an investment.
Mhm.
But as
Mhm.
for right now, they're still at the top of my pyramid. They're still up there, a very small allocation, like 1% each.
Okay. So Sweet Thumb shared that she invests into VGT. So other than VTI, what are is there any other? I know you have SPHD and SCHD. Like
Mm-hmm.
what are your preferred ETFs that you incorporate in your portfolio? Do you know offhand?
I don't really incorporate any other ones other than SPHD and SCHD.
Okay. Okay.
I like to keep it simple because researching the ETF it's tedious. It's tedious work. It's a lot of work researching the ETF. And when I initially was doing my research on ETFs, I wasn't very knowledgeable. So I said I'm just gonna keep it simple, and that's it. Now I have been curious about the Bitcoin ETF.
I'm surprised you say that because I would think that you would have considered it so much easier in comparison to individual stock.
You said it's easier? No, because
I
you have
thought
to
that
worry about expense ratio and things of that nature, and it can be a little tricky to someone that's new. Like
okay.
they'll look at and see what's inside of this basket, but they're not looking at the
They're not looking
dividend
at the
payout,
dividend
or
yield and
they're
the
not
okay.
looking at the expense ratio and things of that nature.
Mhm, mhm. Another thing that I like to stress is taking a look at that as well as,
Hmm.
all of the fees that you potentially could be incurring through, wherever you're doing your retirement account or your whatever type of investment account that it is. Because, I've done a couple of videos lately just sharing that because, if you're not taking the time at least quarterly or I would say at a minimum to check on the performance of your investments, including your retirement accounts, 401k, IRA, whatever it is,
Hmm.
you really could be losing out on fees and expenses that you didn't realize were eating into your potential profit, as
Yeah.
well as the performance of what you're invested into. So, all right. So, come on now, Press.
Hmm.
What are what went on in the news? Do you wanna do a little bit of, this week, touch on any news or any stories or anything that went on
Sam
recently?
Bankman-Fried received his jail time. I believe it was 25 years. And those who
Mhm.
don't know, Sam Bankman-Fried was the founder of the FTX crypto exchange, and he was basically stealing everybody's money out the back door and giving it to his buddies and greasing palms of politicians and things of that nature. He was basically living like he was untouchable, and it all came crashing down on him, and he got caught, and he's going to jail for a very long time. But unfortunately, I don't think everybody's going to get all of their money back. And that's the part that hurts the most, because a lot of people was affected and lost a lot of money. But yeah, he did get what he deserved. He got what he deserved.
So I know you said that you have your way of holding your crypto, but where do you do your investing into any crypto assets that might be newer? Do you use Coinbase or are you able to use more of one of your regular platforms like Webull Pay?
I use Coinbase because I can set the stop loss. So if it's not available on Coinbase, I just won't touch it. I
Okay.
don't want to take the extra added risk of going on these other exchanges and using a VPN. Although I do have a VPN, but I don't want to go through that extra technical stuff because I'm not very tech savvy per se. So Coinbase is very user friendly, and I can set a stop loss and keep it simple. I like to just keep it simple. Now you do have other ways that you can get a hold of these other said coins, but you gotta have the knowledge to do so. You have to do your research. I'm just not the one to show you because I don't indulge in that far. I keep it simple.
Okay. Chocolate Drop was asking if we could ever talk about whole life insurance or a future life in a future life. That is not something that I feel comfortable talking about, but I do believe uh the word is an insurance person. So maybe
Mhm.
you could reach out to him on that, but I would not want to. I do not feel versed in that topic, so
Right.
yeah, I won't be covering that here. I
We just
really
want to
won't.
make the money. We just
Yeah.
want to make some money.
Um, Thanks for sharing us out, Kevin.
Somebody said I know him because of a documentary that I watched. That's craziness. Yeah, that was crazy. He was taking everybody money. And it just so happened, life happened to me, and I had to liquidate that account, my FTX account. And it happened like a week before the whole scandal went down. I was like, whoa. And it turns out I was in profit in that particular account. So it didn't hurt me none, but wow, I just missed that. I had just missed that bullet right there.
Mhm. David is mentioning about Fidelity's Go account and having kind of robo investing options. I've never used that and I'm not that familiar with it, but you can look into it. But I just like to stress just keeping your eyes open to um, what you're before you even start investing into it. What is the performance? What are your expectations? Is it in line? And then once you start investing, you still have to continue to take a look at it and know if it's in
Mhm.
line with if it's achieving the goals that you wanted it to, and if it's in line with what you're trying to accomplish. But yeah, expense ratios and fees and dividend yield. Uh, don't let these things overwhelm you, but these are things that can enhance your portfolio. Uh, Enhance or deter, depending on, the choices that you make. If the
Right.
expense if the expense ratio is high, that'll be eating away at your potential profits, especially, if there is another option out there that has a lower expense ratio, another broker that has lower fees, another option that has a higher dividend yield. So, you have to do a little research to find a balance on that, and I think we both, are content with, for example, a VTI expense ratio and the
Mhm.
quarterly, dividend that it pays. But, people are big on you kn some certain people may be chasing the dividend yield and then not being as in tune or concerned with the performance. What do you think about that, Prez?
Yeah, you do have a lot of dividend chasers that chase the high dividend yield, not realizing that it's not balancing out right because of the share depreciation. The share price is constantly going down, and on top of that, taxes and expense ratios. Now, my overall thought process is to keep it simple, keep a nice, simple ETF that's low cost. And on top of that, try to make sound choices so that I can try to beat this ETF as far as the maximum returns and beat the S&P as far as the percentage-wise returns. So I try to make good, sound investment choices to add to that ETF being the base of my portfolio.
Yeah, Chocolate Drop. I see that Sweet Thumb is also mentioning Alonzo Hall. I know Sheed we hear often mentions him. So those are a couple of channels that maybe you could take a look at to get some insights on your question.
Mm-hmm.
Hey, Frugal Mama, thanks for tuning in. I hope you're having a nice holiday.
I would like to stress misallocating your funds as far as getting into these risky assets. Be sure not to become over leveraged. Make sure that it's a small enough amount to where as though you can afford to lose, because you will lose sometimes in these trades, because that can cause you to become discouraged, and I don't want that for you.
And so
And take profit. Be sure to take profit. That is very important. Have your exit plan before you even enter the trade.
Now, when you say take profit, you mean as a trader?
Right.
Okay.
As far as getting into these risky assets, don't try to diamond hand these risky assets.
Now, okay, I just wanted to highlight that because or stress that because if you're just saving for retirement, for the next 20, 30, however many years you have until retirement, that's not something that you need to incorporate. You just need to, like I'm saying, check on the performance, increase your as you can, increase your investment amounts, making sure that you're in tune with the goals that you're trying to achieve. But hopefully there will not be any time that you're tapping into your 401k or changing jobs and uninvesting your money or any of that. No taking money, no taking profit. But if you want to incorporate trading to as a way to make extra money and to accelerate your investing because you may feel that you're behind or something like that, then that's when you have to use your stop loss, have a plan, and definitely, yes, take profit so that um, because we're in this to make money and we don't want to, even if you have, say, a certain amount of shares, there's nothing wrong with taking profit on a portion of it. And then you never know the rest of it. If you say you sold 50 or 75% of it, that 25%, you may take a loss on it if it drops and hits your, say, stop loss.
Mm-hmm.
But if you can move your stop loss on your entire investment, then you're not going to lose out at all. You're going to definitely get out of it with some amount of profit on everything that you put in as a trade. So
that is correct. I basically trade to supplement my longer term investments, to where as though when I first started playing with the investment calculator and I seen how long it would take me to get to where I needed to be, that's when I decided that, okay, it's time to learn how to trade to try to play catch up.
Mm-hmm. Is everyone in the chat familiar with the investment calculator and just the whole concept of compound interest? Do you think that even like your family members truly, Prez, really understand the impact of compound interest if they were to stay consistent, what they could achieve in time?
I wish they did understand more, but like
So
I said,
that's a no.
everybody don't wake up at the same time at the end of the day. So I will continue to be their alarm clock. And that's where I'm at with that, as far as family, friends, loved ones, co-workers, what have you. Anybody I meet on the street and I've ever said anything about the market to you, I already know that everybody wakes up at different times. So yeah, I will continue to be their alarm clock.
Okay. So I only saw one answer come in on the chat and it said no. So, do you want to take a quick second and do a scenario in the investment calculator?
Um,
Or do you want to save that for another show?
and we can say that for another show. I
Okay.
don't
All
really
right.
have any. I think we are. Did we even cover the investment calculator on here before? I'm not sure if we did or not.
I don't know. I don't think so. But I think that uh being consistent, if you can really commit to being consistent, like what would you say in minimum? Usually like the challenges that I've shared some of my videos on, they started off as 10-week challenges, but
Mm-hmm.
I don't think I don't know that I was even in I was on YouTube, but I don't think I've ever even given an update at 10 weeks. It's usually more substantial than that because you have to give things time and you have to really whether it's a daily commitment or a weekly commitment, I think you really need to stick with it for a long time in order to just to start to see the results. So, if
I
you wanna
started my
be
updates at after the first week, just to give a visual for those who are new on what it's supposed to look like. That's why I chose to do the weekly updates with small amounts, because it's somebody with a small budget that doesn't know how it's supposed to look. They're gonna be, I can't afford this, or what should I buy, or things of that. They're gonna be asking these questions, and it's gonna be no one there to answer those questions for them. So
Mhm,
hopefully they can watch my content and see my weekly updates, and they can see what it's supposed to look like.
mhm, mhm. So, I have this comment here from Kevin, over at Tuber Chat. What would we suggest for someone who invests their first 1,000 and sees it double over time? Um, how much to take and redirect? Not sure I completely understand the question, but I you wanna, give an answer on that first?
I get that. I get questions like that a lot with the actual dollar amount. Now, I ask these people, how often can you afford to come up with this $1,000 consistently? Like just setting out $1,000 and expecting it to appreciate and double over a said period of time is like a hope and a prayer. It's like consistency is the key here. It's like how often can you come up with this $1,000? That's the question that I want to know. How often can you
Mm,
come up with this $1,000? And if you can't come up with this $1,000 on a weekly, monthly basis, then you should scale it down some, in my opinion. You really should scale it down to something that you can afford on a weekly, monthly, daily basis,
mhm, mhm.
and start there. That's where you start. Don't start with just that lump sum, because you don't know where that next lump sum is coming from unless you balling like that. Where are you gonna come up with the next? How often can you come up with this $1,000?
Okay. All right, but let's say hypothetically speaking, I s I'm gonna gift your son $1,000 for that's it, one-time gift for the future, um, invested on his behalf. This is what I would say I would ask or think that you would do, that you would put maybe I don't know. You probably would put 90% into an ETF or a high percentage into an ETF and then um, let it, and then maybe a few individual stocks that you really think would have the next 12 years of potential till he's like into his adulthood, as an example for it to grow. But yes, if it's something that's going to be built consistently, that it would be ideal. But I know you definitely have a plan for, uh, long-term
Just a
growth. You're
thousand dollars and just to leave it there and leave it alone. I would
mm,
just put it all into an ETF,
all into the ETF. Yeah.
but I would do it in increments. I wouldn't do it all at one time. I would do it in increments until
Yeah.
that $1,000 is depleted. Like,
Mhm.
let's say I
Mm.
would break it down into, I don't know, any number, any amount. You can break it down. I like investing in small increments because of the nature of the day-to-day market volatility. So I will break it down in as small increments as I possibly can to get the best price that I possibly can. That's how I would do that. If that's you're just going to invest just $1,000, but I would put just that whole $1,000 into an ETF.
Mhm. So I've continued to add to it, but like when I was getting my daughter's portfolio started, I put a few $1,000s into Fidelity. And
Mm-hmm.
then from there, I was doing $100 when I did it, not every day. At first, it was every day, but then I invested $100 at a time. So say I put $1,000 and I invested $100 at a time, and I was doing 80% ETF, and then I was doing 10 and 5% increments into individual stocks. So for her, I was doing an S&P 500, total US stock market, and then say Apple, Home Depot, Tesla, smaller percentages there. Those are her individual stocks. So, you had come up with a breakdown that works for you, but I think both Prez and I are high on having a strong foundation of an ETF, low expense ratio ETF that pays a quarterly dividend that can then be reinvested into the position and continue to build that out for you long term, as far as our long term investing for who knows when, retirement, for the future. Prez, you're muted over there.
Oh, I'm sorry. I said that's because we went to the same university.
Yes, we did. We did, and that's KGU. So yeah, I don't know. Did we cover everything that you wanted to cover today?
Yes, we did. We did.
Yeah. Yeah. I got scared and because a lot of this room has like this black tile in here, and
Mm-hmm.
I closed the door and didn't realize that I locked a cat in here with me. So if you guys see me looking around and a little jumpy at times, it's because this cat is scaring me. And it just seems like the cat is black also. So it just seems like she just keeps on going to places where I can't quite see her against the background of the black chair and the black wall. And I just, oh.
Wow.
But I needed the door shut so I can get a little quiet time here. But all right then. We have a good amount of people in here. Thank you guys for tuning in. Let me know in the chat if you're enjoying the discussions, if everything that we're covering are things that are interest to you, and what potentially things that you would like to hear from us, not just in our live streams, but just in general, so that we could try to bring that
Mm-hmm.
to our channels and help you on your journey, because I'm here sharing my journey, but I want to know what things are uh what things are you working on, or what things potentially am I working on that could help you, or you are interested in knowing more about.
If it's an individual company you'd like me to give my opinion on, like I'll take the time and do the research and put out a video on where I would rate it on as far as my pyramid strategy is concerned, which I do plan on doing more of individual company analysis. Yeah, I'm here.
Mhm, mhm. Okay, so Kevin elaborated a little bit more on what he was saying. He was talking about taking profit and redirecting it to another investment, and also systematic in investing. I think that we both agree on that it's good to have some automatic investments within your portfolio for your long-term positions.
Mhm.
I don't really take profit on my long-term positions and reallocate them very often. That's something that doesn't occur for me very often. How about you?
No,
No. Yeah.
no. The things that I'm taking profit on, if you imagine the pyramid, I'm taking profit from the top of the pyramid, the things that are on the top two layers of the pyramid. Everything towards the middle and the bottom of the pyramid, I'm not touching those. I'm just accumulating by dollar cost averaging over time. because 9 times out of 10, most of these companies are paying me a dividend every 3 months, every 1 month. So yeah, I'm not taking profit on the longer term investments. Like we're married, it's a marriage.
Mhm. Yeah, and I would say overall in my story, I wasn't taking profit. I sold all of my JetBlue,
Mhm.
actually at barely any profit, maybe even at a slight loss. And then, I just put it into something more basic, a VCI or a VOO,
Right.
or something that was performing well. But I'm pretty much a very, I don't know, I'm 95% investor. I'm just buying and holding long term, so I don't have this constant, selling and reallocating, that's only when I am in a trade, and
Mhm.
that's not an every week thing for me. Would you say it's an every how often for you?
How often do I trade?
Yeah,
If the opportunity presents itself every week,
every
because I trade to supplement my investing.
mhm,
I don't trade to try to buy nice things or things of that nature. I trade to try to catch up because I started investing at a later age. I'm in my 40s. Versus if I would have started in my 20s, then I would be, you know, probably ready to retire by now.
mhm. So, yeah, I think, there's lots of different elements that factor into all of these decisions, and people have different points of views.
Mhm.
I love talking to you, Prez, because I think we usually have a very similar point of view, so it
Right.
makes it easy, and I don't mind, my subscribers hearing your point of view because I feel like your point of view is my point of view, something that
Mhm.
I think is things that I agree with. So, um, let's
I
see.
just believe that long-term investing will win in the long run versus short-term investing. You're going to win longer with longer-term investments in the longer run versus trying to trade your way to $1 million. Even though
Okay,
it's possible with the proper knowledge and skill set, but it's nothing like long-term investment.
okay. So, Socks in the Garden has a question. She's watching through your channel. Do you want to acknowledge her question here?
To make an initial investment in something like VP,
I think she means
oh
VTI.
VTI or the
Mhm.
S&P 500, which brokerage account site would I go through? You can go through any brokerage site platform that you so choose. You have multiple different brokerage apps out here and platforms that you can use.
Mhm.
That's solely your decision on doing your research on that said broker. But to give you a few examples, you have Webull, you have MooMoo, you have Fidelity, Charles Schwab, M1 Finance. It's a
Okay.
whole list of different avenues that you can use to get into VTI or VOO.
Do you have a retirement account, Socks in the Garden? Because I think that's my first step. That was my first step, and if I didn't do any of the other things, even my daughter's account, if I didn't do any of these other things that I do, if that's all I ever accomplished and just worked until my 60s, that is enough, and that could have been enough for many people. I think
Mm.
it's a big part, especially because we don't know, what we may need in retirement. The more the better, um, but, I think that's the first step.
What do we think about Vanguard ETFs? VTI is a Vanguard ETF. VOO is also a Vanguard ETF. They're both Vanguard ETFs. So Vanguard is one of the largest asset managers in the world. I
Mm.
think BlackRock is the largest, and then it's Vanguard. If I'm not mistaken, I could be wrong. Somebody correct me if I'm wrong.
I don't know off the top of my head, but I like Vanguard ETFs, but once I did some research within Fidelity's, index funds in comparison, I
Mhm.
actually found FXAIX, which I prefer in my IRA, which is the only place I have exposure to it because I don't have everything at Fidelity. I prefer it to VOO because of the lower expense ratio. So,
Right. I have
which
to
I
look at the FAX. I don't even know how to see. You say it. I can't say it.
FXAIX. It's
Okay.
S&P 500 uh, index funds at Fidelity. So, but yeah, I think Vanguard has some great options, great options with a low expense ratio as compared to some other platforms like Invesco or other brokerage houses. I think they have a good balance. I don't have an actual account there, so I invest into the funds on other platforms, but I think, you have to do a little research in finding out about the fees and the different things that, like I said, will impact your account on these different platforms.
Now, Vanguard, as far as a platform, I would prefer Fidelity over Vanguard as far as the platform. But as far as the actual funds, I really like their funds. They have even funds that I'm not actually invested into that they have available that I still like. I just don't have the time, energy, or effort to allocate funds there. So why not just keep it simple? And that's why I chose VTI as my favorite. But yeah, they have all types of ETFs. You have your healthcare ETFs, you have your telecommunication ETFs, you have your energy ETFs, you have all different kinds. You can have a portfolio of just ETFs and not go wrong because you have all of these different companies in these ETFs. You just got a basket full of baskets.
Chocolate Drop is losing me here. I don't know who Mr. CS is. Do you know? I don't get it. Chocolate
Me
Drop.
neither. I had to
Chocolate Drop,
scroll
who
up.
are you talking about? I don't know. I'm looking, I'm just not able to tie it to whatever it is that you're talking about over there. Um,
What's the ETF? The ETF is a basket of stocks. So say
it's
you look at
cash.
your VTI and you have the share price of $250. Well, inside of this $250, you have over you have access to over almost 4,000 companies inside of this $250 basket. That's what an ETF is, just a basket of stocks.
Yes, exchange traded fund. So, yes, it's an investment choice that gives you exposure to many things through one investment choice. So, a beginner friendly investment because you don't have to know how to choose an individual stock. You don't have to know, oh, how much money am I going to put into Apple and Nvidia and Google and Tesla and you can invest. You can get started by investing all of your money into an ETF that gives you exposure to a little piece of all of the things that I mentioned just now and so much more.
Then eventually you'll start wanting to learn how to research individual companies because you're going to start hearing about, oh, Apple is up 13% this week, or Nvidia is up 30% this month. You'll start wanting to learn how to research these individual companies because you're going to start you're now exposed to the market because you're invested into this ETF. You understand what I'm saying? So now you want to learn about these other individual companies because you're going to want more exposure to these individual companies because you're hearing about these individual companies performing well at certain different times of the market.
Mhm. And over time, you can have potential higher growth and in your individual stocks, but just having a foundation of just steady growth of at least, you know, 10 or 20 whatever percent in your ETF. Last year was a very good year at about 27% for the S&P 500. But yeah, there are going to be years when it's going to be down, but overall you're going to get probably at least 10%. Um, and if you're holding it long term, it's something that you can just have and not have to really worry about. So,
Mhm.
Ahmed. That's something that I think both Prez and I have shifted our portfolios to have a higher percentage in ETF, and then from the highest percentage in ETFs, and then lower percentages into individual stocks, crypto, and then the smallest into the most speculative type of things.
I basically want, my thought process on that is I want to prepare myself for the next time, the market cycle that we don't like, the bear market. I want to be prepared to where as though I'm able to stay consistent throughout that period as well, because if you're new starting now in the middle of a bull market, you're not going to know how to handle a bear market if you're not doing your right research and you're not investing into a sound foundation and building a sound portfolio and good investments off the jump. If you start off in risky assets, it's not going to look good. It's really not going to look good.
Mm-hmm.
So if I can help try to prevent that to someone that's not into the market yet and they want to get into the market, then so be it. Then don't get in that car. That's all I got to say about that one. Take your time when it comes to these risky assets. If you're going to be a knucklehead like me, because I'm not going to lie, the info was out there right in front of me. The ways to do this the right way was in front of me, the same way we're presenting it to you. And I was one of the knuckleheads. I was listening to the hype. I want to make the fast money. You understand what I'm saying? And that's not a good mindset to have, but we're human at the end of the day.
Okay, so I just shared Miss V's link. She is live right now if you guys want to go over there and check it out. I hope that everyone enjoys the rest of their weekends and the rest of their holiday. If you celebrate at all or have a special dinner or anything about to go on, thank you for tuning in. And of course, Prez will be coming up with some more topics for us, I think.
Of
So
course.
we are now finishing up episode 7. So will we be back next week, Prez?
Of course.
Of
As
course.
long as I'm
Okay.
breathing, I'm here.
Okay. So why don't you close us out then?
If you don't find a way to make money while you sleep, you will work until you die.